I've just opened an account with Scalable Capital. That's one of the UK's largest robo-funds. I've recorded the whole process step by step, so you can see exactly what's involved. As with any robo-fund manager, the first thing you do is to take a risk questionnaire that matches your risk appetite with their stock portfolios. Now, what really sets Scalable apart in the robo-fund space is that the minimum investment is £10,000, so that's certainly not for everybody. Their management fee is 1%, so 0.25% of that is the ETFs in which they invest, and 0.75% of that is what they receive as asset managers. So here are the steps I went through. I hope you find it useful. So here's the onboarding process for Scalable Capital. It launches straight into the risk questionnaire. The option I've chosen is to build my wealth moderately. Now, a key part of their approach is it's risk-based, so you have to say what size of fluctuation you're willing to consider. The greater the return you want, the greater the risk you have to tolerate. So for the highest risk category, you have to accept 20% fluctuations in the value of your investment. I'm getting on a bit, so I chose 10 to 20%. Then I have to choose an investment horizon, and I think 10 years is fine for me. How much negative performance would you accept in a bad year? Well, I was investing through the year 2008 and 2009, and during that period, the stock markets fell by about 50%, and a typical market correction is about 10 to 12%, so I think 25% would be something I'd be willing to tolerate, so I'll take their default setting. Now notice the risk warning. They say that the risk of loss is not to be mistaken with the maximum possible loss, because of course you could lose your entire investment if we were to have a catastrophic market event, and that's why everything's phrased in terms of probabilities. Now they're trying to assess my knowledge and experience, so they're asking which assets I have experience with, and they actually ask for the number of transactions in the last 5 years. Now, of course, I used to be a strategist, so I've got experience of all of these asset classes, but on purpose I trade very infrequently, so I'm not sure this reflects my experience, but still, I'll fill it in as they say. There we are. Which of the following investment services have you previously had interaction with? Well, I used to advise the advisors. I've signed up for Nutmeg, so I suppose I have used an investment manager, and I certainly have traded financial products myself. What's my regular net monthly income? Easy? 0. My monthly outgoings? Yes, about 1,800. Excluding property, I'd say my net worth is about 150k. And my cash reserve is more than 6 months. So here they extrapolate the value of my account based on a 50k investment and a £300 monthly deposit. I won't be making monthly deposits. My initial investment will be considerably less than that. Let's say it's their minimum of 10k. And you can see that over 5 years, the most likely value of the portfolio will be just under £15,000. And as an annualized return, that's about 8.1% per year for 5 years. And you can see the allocation of the portfolio here at the bottom. Currently, the portfolio allocation is about 60% in stocks, and that's quite a high risk portfolio. The risk category they've chosen is for 18% VAR. So if I hover over the information bar, it tells me what is VAR. VAR stands for value at risk. This is the 1 in 20 year loss that you'd expect. So an 18% value at risk means that 1 year out of every 20, my portfolio would lose about 1/5 of its value. And that value at risk of 18% came from the risk questionnaire which I completed. Now what it doesn't say is whether I'll be locked into this risk category for the lifetime of my investment. So what I'm going to do is dial down the risk. And you can see that the return on my portfolio has decreased as well. Because I'm taking a lower risk, I'm willing to accept a lower return. Now I can look at the portfolio allocation in terms of asset classes or which ETF that they're going to buy. You can see that their US stock allocation is fairly high at 15%. And Europe's not far behind at 12%. But there's also a very big allocation to UK government bonds. And these are the average weights of an indicative portfolio, where that average is taken over the last 15 years. I'm fairly happy with these settings, so I'll carry on. Now I'm going to enter some personal details, which of course you won't see, and then we'll rejoin the onboarding process. Okay, so that onboarding process is now complete. It was very straightforward, it didn't take very long. They did require a lot of personal details, things like my national insurance number, the number of children I've got, and my net worth. I'm not convinced they need that information in order to manage my money, but that's the only real issue I had with the onboarding process. So overall, a very slick process, a nice interface. The risk they came up with was a little bit too high, I think, but the whole process was very well explained and very clear. The minimum investment amount is 10K, so if you're not willing to commit that kind of money, Scalable Capital is not for you. But they do seem committed to low-cost investment using ETFs with a risk-based approach, which I like very much. And so far, I'm very happy with my scalable journey.